James Gerrish, Shaw and Partners, is getting ready for the start of the Aussie trading session and has run the ruler over Amcor's report as well. Welcome back to the program, James. Good to go and see you there, mate. Can I go and ask you about Rio Tinto, just more broadly, because we've seen the iron ore miners come under a little bit of pressure recently. Anything to do with that report that's come out?
Yeah, good morning, Scotty. And I'm back in the office for the start of the year, so I was just listening to your guest prior around the CBD coming back into force. So I think numbers are increasing up the top end of the city anyway. There, Scotty. Rio's update around the issues they're facing there. I don't think that's been an impact on the share price in recent times. I think it's been more of a case of US dollar strength has put some profit taking amongst the commodity companies. So that should reverse today. Iron ore's been strong. The rest of the commodity complex was pretty strong overnight. So I would suspect some recovery in the commodity names, including Rio, on the market today, guys.
Well, James, I know you've got your eye on Amcor. What are your thoughts on that result?
Yeah, first half result this morning for Amcor, it was solid. They reaffirmed EPS guidance for growth of 7 to 11% for the full year. So there was no real surprises in terms of the Amcor result. If you think about a packaging business, fairly defensive in nature, it's trading on 15 times, it's growing earnings, it's sort of that 9% at the midpoint of that guidance range. They've got a really strong balance sheet. And I think this is an interesting company because you've got two main players in the sector locally, or listed players locally, Amcor, and then you've got Pact Group as well. So I think this is going to be sort of an obvious indication of where money flows. Pact Group is struggling. They've got a lower quality balance sheet, lower quality business. I think this year is going to be a year where the money flows to the quality, and Amcor's quality in the sector. So I thought it was a good result. And the stock should be fine. It wasn't a beat, it was a reaffirming of guidance. They increased their capital management initiatives. But yeah, an inline result for mine, guys.
Did they make any commentary when it comes to supply chain disruptions, margin pressures at all?
No, not that I saw, Scuddy. They did cite in a general sense around supply chains, but that hasn't impacted their earnings, as you see. So they're doing a pretty good job in maintaining it. It's a good point because a lot of companies have been out there citing issues with supply chain, citing increased cost pressures, and that's having an impact on margins. But these guys seem to be managing it pretty well.
James, Aussie Broadband, let's talk that result yesterday.
Yeah, a trading update from ABB yesterday. It was there are a couple of swings and roundabouts, but the key takeaway is that organic growth rates remain very robust. They did put out EBITDA guidance for the full year, and that is they've said that's going to come in at 27 to 30 million. That was about a 10% miss in terms of our numbers, but it's all relating to future spend for future growth. So on our numbers, we get a slight downgrade in FY22 in terms of EBITDA, about 9%, but then you get upgrades in outer years. I saw this morning that Credit Suisse upgraded ABB to a buy equivalent as well. So they've got the OTW acquisition in play. So that seems to be going along as per programmed. And so if you think about the combined entity, it's going to be growing strongly. 30% annual growth rates. It's going to be delivering, if it goes through, 100 million EBITDA per annum. So we like the stock. We upgraded our price target marginally yesterday, and it's still a buy here at Shaw.
ABB is a buy. Look, more broadly, we're at the start of our reporting season here locally. What are some of the areas that you'll be focusing on over the next month or so?
Yeah, it comes down to, I think this is going to be a really divergent reporting season, Scuddy. So, it probably goes, I'm probably stating the obvious, but those companies that miss are going to be dealt with pretty harshly, particularly the higher value ends of the spectrum. And I think the other trend, and we've seen it recently with names like Megaport, MP1, if you miss and you're trading on a reasonably high valuation, I don't think there's going to be a rush for investors to go in and buy the dip. So I think the market will reward higher, the market will reward performance, and I don't think the market's in this bargain hunting, buy the dip sort of mentality. So I think that'll be a characteristic of reporting season. I think earnings will remain strong. We saw The rhetoric from the central bank yesterday was probably as per expected, but there's a huge divergence around, and you alluded to this before, what the market's expecting in terms of rates and what the central bank is saying. But overall, I'm not sure who's going to be right here. I suspect the market's probably a little bit over bullish on rate increases. But overall, the backdrop from a monetary policy standpoint still remains pretty supportive. So for me, I think it'll be a pretty reasonable reporting season. But again, there's going to be some big variances at the stock level.